Hello students, in the previous lecture we were discussing about the meaning of budget and types of budget. In this today's lecture we have planned to discuss the sources of public revenue in India. Public revenue means the government's revenue. Public, the meaning of word public is always taken as a government's. So here public revenue means the government revenue. So what are the sources of public revenue in India or for central government or government in India? We are going to study in this lecture. What is let us discuss first the meaning of public revenue. What is public revenue? According to Dalton, which Dalton is the famous and very renowned public finance, or we can say it. He was economist, and his most work or famous work is in public finance. So the name of Dalton is very reputed and well known in case of public finance. So according to Dalton, the term public income has two senses, wide and narrow. In its wider sense, it includes all the incomes or receipts which a public authority may secure during any period of time. In its narrow sense, however, it includes only those sources of income of the public authority which are ordinarily known as revenue resources. To avoid ambiguity, thus the former is termed public receipts and the latter public revenue. So according to Dalton, the public income the Dalton considered in its wider sense and in a narrow sense. In a wider sense, it includes all the incomes or receipts which a public authority may secure during any period of time. And in a narrow sense, it includes those resources or income of public authority which are ordinarily known as revenue resources. Receipts from public borrowing, that is public debt, and from the sale of public assets are mainly excluded from public revenue. For example, the budget of the government of India is classified into revenue and capitals. So head of revenue includes the head of income under the capital budget are termed as receipts. Thus the term receipts includes sources of public income which are excluded from revenue. There are two main sources of government revenue in India. First is tax revenue. Taxation is the primary source of income for the government. The most important revenue receipts for the government are taxes. Taxes are involuntary fees levied on individuals and corporations to finance government activities, and taxes are compulsorily should be deposited with the government, and it is a legal what can we say, it is a legal duty of citizens to deposit the taxes according to their ability to pay. What is ability to pay? According to your income. So revenue receipts can be of two types, non-tax revenue and tax revenue. A tax revenue is the income gained by the government through taxation, and non-tax revenue which is different than the taxation. So tax revenue is the result of the application of tax rate to a tax base Total tax revenue as a percentage of GDP indicate the share of the country's output collected by the government through taxes. Tax revenue can be regarded as one measure of the degree to which the government controls the economy's resources. Taxes collected from both direct tax and indirect tax are the government's tax revenue. It includes collection from income tax, corporation tax, customs, wealth tax, tax on land revenue, etc. Non-tax revenue includes non-tax revenue is the recurring income earned by the government from sources other than taxes. So non-tax revenue is income source of government other than taxes. Now let us discuss the tax revenue. Under the tax revenue, union excise duties includes. What is union excise duty? They are presently by far the leading source of revenue for the central government and are levied on the commodities produced within the country, but excluding those commodities on which state excise is levied. For example, liquor and narcotics, drugs, etc. So where state put the excise duty, central government central government will not levy. The most important commodities from the revenue point of view are sugar, cotton, meal, clothes, tobacco, motor spirit, matches, and cement, etc. Custom duties. Custom duties include both import and export duties. These are the second most important source of revenue for the central government. Then income tax. Income tax is at present another important source of revenue for the central government, and it is levied on the income of individuals, Hindu undivided families, that is combined families, and unregistered firms. Corporation tax is there. The income tax on the net profit of joint stock companies is called corporation tax. Wealth tax is there. It is an annual tax on the net wealth of individuals and Hindu undivided families. It is a progressive tax. What is progressive tax? Progressive tax increases with the increase in income. So progressive tax follows the principle of ability to pay. Means if income increases, the tax also increases. When income decreases, tax also decreases. So richer have to pay more taxes and poorer have to pay less taxes. So here the principle of ability to pay is followed in case of progressive tax. And in case of regressive taxation, when income increases, the proportion or percentage of tax decreases according to that. So regressive tax is not desirable. Progressive tax is always desirable because it follows the principle of ability to pay. Means tax is according to your ability to pay. Means if you have higher income, then only you have to pay more tax. If your income is lower, then your tax will be lower. Next is gift tax. It is a tax on gifts of property by an individual in his lifetime to future successors. Capital gain tax. It is applicable to capital gain resulting from the sale, exchange or transfer of capital asset, or capital gain tax is applicable in the exchanges on the stock market, and capital gain It is mostly applicable for the capital gains resulting from selling, exchanging, or transferring of capital asset. Next is hotel expenditure tax. Recently, a new tax has been levied on those who patronize high class hotels, etc. Tax on foreign travel. Another new tax levied on foreign travel for conserving foreign exchange as well as to raise revenue also. Now let us discuss non-tax revenue. First is interest receipts. This largest non-tax source of central government's revenue receipts is the interest it earns mainly on the loans it has advanced to state governments, to financial and industrial enterprises in the public sector, etc. Next next non-tax revenue source is surplus profit of the Reserve Bank of India. The surplus profit of the Reserve Bank of India is also a part of the revenue of the central government. In recent years, these have been quite substantial because of the large borrowing by the government from the Reserve Bank of India against treasury bills for financing the 5-year plans and all other plans. Next is currency, coinage, and mint. The government also derives income from running the currency note printing presses, mints which create the coins, then coinage. Moreover, profit are made from the circulation of coins. This profit being the difference between the face value of the coins and their manufacturing cost. Uh, for example, if the face value of 10 rupee coin is 10 rupees and cost of creating that 10 rupees coin is 2 rupees, then 8 rupees is the profit for 10 rupees coin. So this is the face value means the printed value on that coin, and the actual cost of producing that coin is very less, so that the difference between face value and manufacturing cost is the profit of central government. Then railways. The railways in India are owned and run by the government of India. Accordingly, they pay a fixed dividend to general revenues to the central government on the capital invested in the railways. Besides, a part of the net profit made by the railways is also payable to the central government. Next source of non-tax revenue is profit of public enterprises or PSU, that is public sector undertakings. Public enterprises owned by the central government, for example, the Steel Authority of India, that is SAIL, Hindustan Machine Tools HMT, then Bharat Heavy Electricals, that is BHEL, State Trading Corporation STC. The profit of such public sector units PSUs are another source of revenue for the government of India. Other non-tax sources of revenues are, the main source among them is the departmental receipts of the various ministries of the central government by way of fees, penalties, etc. Uh, Other sources include also penalties, fees, uh, stamp duties collected throughout the country. uh, the seligmans, we can classify the public revenue under different heads. I have taken here Seligman's classification. uh, Seligman's was the famous economist, and he has given classification for public revenue. He classifies public revenue into three groups: gratuitous revenue, contractual revenue, and compulsory revenue. So, gratuitous revenue includes all revenues such as gifts, donations, and grants received by the public authorities free of cost. They are entirely of voluntary nature. Further, these are very insignificant in the total revenue. Second is contractual revenue. It includes all those types of revenue which arise from the contractual relations between the public authority and the people. So here fees and prices fall into these categories. A direct quid pro quo is usually present in these types of revenue. And third one is compulsory revenue. Compulsory revenue includes income derived from the uh, from it includes income derived by the state or government from administration, then justice and taxation. Taxes, fines and special assessment are regarded as compulsory revenue. These revenues express an element of state sovereignty, and it is the most significant type of public revenue in the modern times. So friends, these were the sources of public revenue. Government collects the revenue from these basic two sources, tax revenue and non-tax revenue. And if deficit is there, then government borrow money from the domestic sources, or government can borrow from the foreign country, foreign institutional entities and foreign individual also. It takes the it borrows from the Reserve Bank of India also against the treasury bonds, and government also borrows from the domestic market and finances the expenditure of the government. So friends, that much in this today's lecture. Thanks for watching. See you in the next lecture.